Good morning, traders and investors. Dale Socket, the Trader Boys. We get the markets up slightly. The big leader here is the Russell 2000, up 1%. The big lagger here is the Nasdaq, only up 0.5% there, and followed by the Dow and then the S&P. Money's coming out of bonds, which is positive for the equity market. Money is steaming into gold right here. This is the new contract coming into play. This is the December contract. It's up 29 points on the way to our 2,500 target. So this was a long-term play in the 1750s. We're up to 2050 already, so that's 300 points. We're up there right now, so that is absolutely phenomenal, amazing. We've got oil. Oil's on the charge up 43.12, up 3.4% for the morning, and that's based on the rumor that it's going to be less supply for crude, less supply. So Apple's down slightly, Netflix down slightly. Big tech names here are down 0.4 to up 0.5 for Tesla. IBM and Goldman Sachs are doing okay here, so some money coming into financials here. Not a lot, 0.6%. Now, coronavirus plays here are getting active. They're on the move yesterday, and they're continuing that move this morning. So that's going to be based on some vaccine news and so forth that's coming into the markets here. And oil stocks here are obviously going to be doing well, with oil doing well. All right, Dow 30, as it looks in the pre-market here at 8:40 in the morning, Apple's down a little bit and Walmart's down a little bit. Caterpillar is flat, hasn't had any pre-market trading, and you can see the rest of the markets are up pretty strong, up anyway. So we've got 1, 2, 3, 4, 5 up around 90 cents. And Disney had earnings last night, and it's rocking to the upside. So they're all doing good. Let's jump over to the charts here and kind of look at where we are in the markets here. So on the daily time frame of the S&P 500, we are 1, 2, 3, 4, 5, 6 days to the upside. We're way above our moving averages, so we're a little bit extended to the upside, and we are trucking. So when we just had the ADP report release, let's take a look. On the ADP report, we got 167,000 new jobs. They were expecting 1.88 million. This report missed by a mile. Hugely negative report. So when that report hit, the market did sell off. So here's your kind of your 15-minute time frame. That was the release of the report. Big move to the downside right there. We hit the level of buying right here and popped right back up. So at this point in time, there's zero weakness in this market. There's still only strength, and we are moving to the upside. So on the 60-minute time frame, let's come back to the daily first. On the daily, we can see we got the all-time high here, 33.97. So we still got room to move there. We're hitting 33.17 right now. So this is an area on the gap right here that could provide some resistance. It could provide some resistance, but expect the market to remain bullish after negative news and the buyer stepped in hard. So on the 60-minute time frame, right, we've got a base, right? That was a sell-off on the news, and we're coming right back into this base. So at this point in time, we would have the expectation of continuation of the upside, right? But be ready after 6 days up in the market, be looking and be ready for the downturn on the retracement, of the uptrend, right? Here is your daily time frame in the Russell 2000. The Russell 2000 has made it back to its previous highs back in here. It's been a long road, long flat struggle here, and we're finally seeing some move to the upside. So we're seeing a little bit of sector rotation here, money coming into small caps. Right? So we're not seeing the big tech stocks high flying, big moves up from tech stocks. We're seeing the money coming into the small caps, and it's a little bit of sector rotation. All right, so we're into this supply level on the daily time frame in the Russell 2000. We've had 3 solid days up here and moving right into that supply level. So the Russell is not extended like the S&P is, but coming into this supply level, it's going to create some problems for it. So that's another reason for be ready for some downturn and retracement of this uptrend. On the Nasdaq, we are on the daily time frame here, 1, 2, 3, 4, 5 days up. And if we look at this on a 60-minute time frame, you will see what we call a rising wedge. Rising wedges are bearish formations. It's one of my favorite candlestick formations that are bearish in play. Right? It would need to break below the low here, come back into this supply level to be able to take an action. Now you can just take it on the breakout. So you can come down to the 30-minute time frame here. We are currently below that lower trend line. That would be a trend line break. And if we break the low of these candles here, you can take the trade. My preference is wait for permission to enter short. Make sure the sellers are in control of the market. Institutions are selling. That means you'd be breaking below this low right here. Break below that low, that gives you permission to short. Break below the low, come back in for the retracement into supply, and then we get the short trade on down to 10,990. That's the trade we'd be looking for. Once the market shows it, it actually has weakness. Here is your VIX. VIX is deep inside its demand level. It has been here for weeks. So VIX is another indication, not a very good indication of we could be in for a retracement. On the oil markets, on the daily time frame of the oil markets right here, we are up for 4 days. Nice big strong bullish move today. We're above the previous high in here. So that is great for the oil markets. Remember, oil is a long-term bullish play for the trader boys here. And we've got room to move all the way up into the upper supply area here. So at least up to 46.22 from the daily time frame over the next period of days, if the oil market can remain strong. Let's see on the 60-minute time frame. On the 60-minute time frame, you do have a small demand level here. Now these moves here where we go up, sideways up, are not very strong demand levels on the oil market. The pivot plays of demand and supply on oil are extremely strong. And that's based on the traders of the oil market. If you look at gold, gold is just steam train in 2060. Nice new all-time high in the gold market here. This is your daily time frame. Your demand level is way back down in here. So you can wait for a retracement on gold, and you can join on the gold train. That's your wrap for the morning market update from Dale Sargent, the Trader Boys. Have a phenomenal trading day. Keep those stop ties, manage your risk, and have a great day.